Okay, for the first question, which is E10-9, so purchase of shares at mid-year. Hybeam Corporation paid $319,500 to acquire 90% ownership of Copper Company on April 1st, 2002. At that day, the fair value of the NCI was $35,500. On January 1st, 2002, Copper reported these stockholders' equity balances. So we are given the stockholders equity section on January 1st. Okay, Copper's operating result and dividend payments for 2002 were as follows. So because Hybeam purchased at April 1st, 2002, we must separate the data for the operating result and dividends from before the combination, which is January 1st to March 31st, and then after combination, which is from April 1st to December 31st, with the sales, expenses, net income, and dividends paid. Hybeam uses the equity method in recording its investment in Copper. So A, we are asked to prepare the equity method journal entries, and then B, we are asked to make the elimination entries. So again, for this purchase of shares at mid-year, remember we just record the accounts, okay, after the combination, which is from April 1st to December 31st. So for A, it is very simple, like the way you do usually. So debit investment in Copper, credit cash $319,500, which is the purchase price from Hybeam, and then we will record the income from Copper. So what you record is 90% of 30,000. Okay, not the whole 40,000, because we only recognize the data after the combination. Okay, so 90,000 times 30,000, it is 27,000. Okay, and then the dividends also. So it is 90% of 15,000. So we record only 13,500. That is for A. And then for B, remember we need to eliminate the data, the sales expenses, and then net income and dividends paid before the combination. Okay, so we will directly debit sales 90,000, credit expenses 80,000, credit dividends declared 5,000, and then credit retained earnings 5,000. Okay, so basically all of the data you need to eliminate it. Yeah. And then we can directly go to the basic elimination entry. So basically we just do it like the way we do usually. Debit common stock, debit additional paid-in capital, debit retained earnings. Okay, so the retained earnings, remember it must be updated already on April 1st. Okay, so on January 1st is 150,000, and then you will plus the increase in retained earnings, which is from net income minus dividends paid, so 5,000. Okay, 5,000 you plus into 150,000 become 155. Okay, and then debit income from Copper, which is you take only the 30,000 times 90%, and then debit NCI in NI, which is 10% of 30,000. Okay, and then credit dividends declared only after the combination. Okay, and then the investment in Copper, basically it is just 90% of common stock plus additional paid capital plus ending retained earnings. Okay, just times 90%, and then you will get 333,000, or you can simply use a book value calculation to get this number. And then credit NCI and A of Copper, so it's 10% of the common stock plus additional paid capital plus ending retained earnings. You will get 37,000.